Hey guys, it's May from Markets with May. And today we're going to go through Solo Brands, ticker DTC. But I want to set it up for you um, on how the markets are going. I would say that this video is not my typical investment style, but it's a part of our $5 for Christmas stocking stuffers. Oh, that's hard to say. Stocks that are stocking stuffers series. So let's get into it. I'm going to share my screen. Past performance is not indicative of future returns. And even though I will be going through this stock today, you really got to make your own investment decisions. It's not investment advice. It's just my research and opinion on what's going on. So let's look at the markets today. We don't really have any meaningful economic data. I went through this yesterday. So a lot of this really belongs to day traders and however they want to take it through the end of the year. You won't really get any meaningful company news flow until next year. The only thing you might get is a very cold winter, so it may impact crude oil, but nonetheless, the traders are going to do what they're going to do. Right now, the crude oil is trading off of this Russian cap being lower than people expected situation, which I think is a little bit awkward because, quite frankly, they're saying it's because there was a lot of speculation in the markets, and so those people are trading out their speculation. But in truth, it doesn't really alleviate the situation in kind of meaningful way. I mean, at $60 oil, all the US companies make money. All of them will have no problem paying their dividend. And also, if we get a cold winter going in here, there's a problem, here, I think you just hold tight and wait until the next couple of months, and then just see the real news flow come out, because we're kind of in that really weird space where it can still get reconfigured a bit until we move from the December contract into the January, February contracts, where it's a little bit scarier for speculators to get in there. Now, the other thing I would just mention before we move on from this is that what the CME, sorry, what the exchanges, because it's not just that one exchange, what the exchanges were suggesting is happening is it's actually a winding down of gross versus short selling into the market. So at one point, I think it was 6 times long versus short, and now it's 2 times, which means most are still carrying a net long position. They just don't have quite as aggressive a net long position going into the holiday season. And that's what's taken us down 4% on oil. It's just that decrease in exposure. This is what it would look like on an unwind. One day I'll just have to do a video about that because I can see it starting to be relevant as people are getting confused with some of the stuff also going on in the unwind of FTX, which I have videos out on, and we'll be posting the rest of them shortly. Okay, when we look at the market at general, you can see almost every single thing's red. It's actually kind of surprising because it does suggest anything's green has some real buyers in it. So I will probably double down and investigate why some of these are green. AT&T in particular, possibly it's a dividend yield thing, but if that were the case, we'd see all the dividend yield stuff come into play here. So that's kind of an interesting thing to note. Yeah, so it's a very red screen. Now, I hear the technical people are saying certain things about it that may bode poorly as we get into the end of the year. But quite frankly, this market is so incredibly oversold at this point. There's more there. I'm having real struggles to find names that I really am excited to short, and even the names that I would have been excited to short, it's just hard because I'm just like, ooh, that's a dangerous short at that level. Okay, now let's get into Solo Brands. The ticker here, let me put it on here so the screen so you can see it, is DTC. Solo Brands just went public not too long ago. It went public, I think, in October of 2021. So it's not that old of a company. And in many ways, these new companies sometimes all get spit out at the same time. But Solo Brands is an interesting company because unlike the other stuff that came out last year or in this last 2 years, let's call it, this actually has some intriguing characteristics. Solo Brands is basically a roll-up strategy from a private equity company. I'm going to get into what that means and how I'm seeing it. And quite frankly, relative to the other names that I'm suggesting, it has its own brand of how you want to think about it. And what I would say is, in the simplest format, this company it's not so much cheap or expensive. It's really whether or not they carry through this strategy. And if they do, then yeah, they're really, really cheap. If they have a couple of hiccups along the way, then your timing is going to be a little bit different. But if we're talking about, hey, I'm going to buy this and never touch it again for the holiday season, given that this thing trades very cheaply, here I'll show you what it's currently trading at. You can see that it's one where you could buy this or you could buy a Happy Meal and you'll be in about the same place. But you have eaten the Happy Meal and you'll still have whatever's left over here. Solo Brands isn't going to have any kind of major financial trouble, but it came on my radar screen when I was screening because as I was reading this Solo stove and I was listening to the earnings call, it turns out Solo's pie pizza oven is actually one of Oprah's favorite things. And that's actually messing up a bit of the statements. I'll show you where it shows up in the financial statements and how it looks a little funky as to how people might be reading it. The other products they make, they are kind of what I would call a specialty retail brand, primarily marketed online, but I do think there are some stores. Each of these really has its own group of zealot, if you will, lovers of the product. Solo Stove allows you to have an outdoor stove that is less call it environmentally unsound. It's more environmental, the types of stove they have. Now, they started out with campfire type stuff that you might see at a Burning Man or something like that. And I think that's pretty much their audience, quite frankly. And they've moved it into full-on stoves and outdoor cooking. But this pizza oven thing apparently is really great. It'll make you 3 to 5 pizzas, and oh my goodness, there's a bee right here. It'll make you 3 to 5 pizzas and at a shot. And I think it burns for like 3 hours, so you can really make pizzas for a while apparently before you have to reload it with the type of fuel. I think it's like wood burning sticks and stuff like that versus having to bring your own fuel source. My understanding is this oven will allow you to bring your own fuel source, but all of these products have this kind of niche sort of intrigue to them that really speaks to a very particular client who's going to be incredibly a strong advocate. For example, Oro kayaks, you can apparently fold them in half. So you don't need a rack on the top of your car and you could put it in a small vehicle. Chubbies apparently is a type of men's swimwear that is really into it, and so on and so forth. That's going to be this company's deal going forward. And the reason I say that you really have to think of this as a roll-up strategy is because of the management team. And I always look at that when I'm hearing a certain set of things and I'm doing my due diligence. So this is the management team. John Maris, the founder, has been there since forever, 2018. And then the rest of them as well. Summer Webb was the CFO brought in after the thing went public in I believe it was October of last year. I think I have it in my notes here somewhere. Yeah, sorry. Yeah, October 4th of 2021. So Summer was brought in. And if you look at her resume, she's excellent as a CFO, but given the nature of what I'm seeing on this resume, I could see that she was probably brought in because of the trajectory of the future, which is going to involve absorbing acquisitions and looking for prospective acquisitions to continue to fuel the growth of this company. Now you got 2 board seats that are going to Summit Partners, which is absolutely private equity, and 1 board seat going to Live Oak. So that's why I'm saying what I'm saying, because that's probably how they're thinking about this company on the go forward, is using it to roll up a bunch of these very particular types of products that people are willing to pay up for the niche markets, probably mainly outdoors, but surrounding that kind of client, if you will. And it's some of these roll-ups and historically throughout time have been incredibly successful because what they do is they really start to own their specific customer base. In this case, this is an outdoor person that has quite a lot to spend. Okay, these let's see, let's go back to the actual financials very briefly. Again, this is just meant to be a starting place for you to get to know Solo Brands. With the market trading so crazy, I would not necessarily be too aggressive. I would put limited orders in, but this is what the financials look like. You have growth in sales that's fantastic. It's over 40% year over year. Cost of goods sold isn't, is in line with that. So you have that brought down to gross profit, but then you have this SG&A line that's pretty aggressive that then gets carried through and looks ugly if you were to go to the data feeds. Now, this SG&A line is the closing of a deal that they did. So they have to bring that SG&A in. And so this looks aggravatedly high. Okay. So it's whether or not they're able to pick up sales from this acquisition going forward, or just cut the living daylights out of costs. And my suspicion is they'll be able to do some combination of the two. So that's where you're at this level, at this $4.30 price. That's what you're buying in on. You know, and again, because the markets are so crazy, I'm not saying you must buy the entire thing. I think right now, if you're buying anything, you want to cost average into it. But that's what's going on here. And then if you realize that this was a double, then you know anything below this operating income line, you're going to have to think about a little bit differently in the way you're modeling and thinking about the financials of this company, especially in comparison to any other company within the space. But what I would say is, if you look, and this is always important, the market cap of this thing is really low. It's only 282 million. And that's where, given that you got to look through some of this other stuff, gross profit is 64 million. This thing is trading at 4 times sales. It actually isn't so bad given the age of the company and what's going on in the go for it. Sorry, I'm saying that incorrectly because this is the 3 months ended. You got to multiply that by 4. In my head, I did that too fast. So if you multiplied this by 4, because this does not include Christmas, so we're being conservative. So it's a $400 million sales company, $240 million in gross profit, trading at a market cap of 282 million. All right. Now there is some debt. There is some debt such that the enterprise value, this is all more or less right. So I'll just use this. Ooh. See. So you've got debt of 208 million, but essentially this is trading very cheap relative to sales, which is what you kind of need to think about, or you can do it to gross profit. Like I said, you're going to have to do something to compensate for the acquisition once you get into operating income. But from a valuation standpoint, it ain't bad is what I'm saying. Current assets minus current liabilities demonstrates very clearly we're not going to have a problem with working capital here. What I would mention that you also want to take into consideration is this inventory number being up with this, which no retailer is able to place with Oprah. She places you with her. So this inventory uptick, the real question is whether they can fulfill the demand to really take advantage of this wonderful boon of having Oprah help them out. But nonetheless, it is a real positive that the product is being extremely well received by the marketplace. So I like DTC. If we're talking about something under $5 that I think could have upside, you know, risks to this 100%. If you truly believe that GDP is going south and that it's going south in a particular way that it would actually still impact the outdoor luxury, we'll call it, individual, then yeah, this is going to take a little bit of a hit. Now, in fairness, if you were going to buy a folding kayak, you probably weren't going to buy a regular kayak. So there's that. You know what I mean? Because probably the reason you were doing it is not the same as the reason that people just in general would like to buy kayaks. But yeah, so realize that just like anything within retail, there is always economic risk that could throw everything off. However, the way that they spun it on the earnings call was that because they are essentially going to long-term be a roll-up, and they have what they need in the way of financing. If they don't, given who their board is, they'll probably have what they need in the way of financing. Point being in is that if it creates opportunities for them to take in other companies that make sense for this group, they probably do that. And that could also create positive news flow. They'd still have to, you know, integrate such companies in positive news flow, pressure on the earnings, but a speed up of their strategy for what I think they're envisioning for long term. With that, I will hit the pause button to take questions. Hey, David.
Oh, hey, May. Okay, so they do a pizza oven, and what else?
Okay, so that business, which is called it's called the Solo Stove, right? So their original product was actually a campfire metal thing that basically could work off of wood and other things. Like, it was really made for it was made for your Burning Man groups of people that cared about the environment. So it's less polluting apparently when you're burning stuff,
Okay.
and so on and so forth. And they've just evolved it to be more like a countertop stove outdoors, to grilling things, to now this pizza oven thing that apparently is really a product that people like. These are not cheap, right? The pizza oven, I think the initial starter package is something like $400. It's not
Okay,
expensive either, but it is. So that's why I'm saying it's more like your luxury outdoor person. So they're marketing it to people that obviously the Burning Man people, but then
camp,
I don't know why you call, and then they're like tailgaters as well,
yeah, campers.
campers,
There-
absolutely campers. I'm not sure
There's
why
a
that didn't come
company,
to mind first.
there's a company called Yeti that's done really well in that category.
Oh, interesting. Yeah. Okay.
And so what else do they make? The oven, you said some Chubbies? What?
Oh, Chubby's is a different brand. So they make this, all the stove, everything that's burnable goes into the stove business. Chubby's
Okay.
looks to me like it's a men's swimwear company that for whatever reason, people really like it. I don't know if it's,
So that's not part of SOS.
no.
Okay,
And then there's Isle. Do you know this company? Like, I
yeah,
mean, out in California, I figure this is where they would market it to.
I'm not a camper.
Me neither. But even if I was, I don't think I've ever done the fancy glamping that everybody's doing these days.
Okay, so what, they do the oven, what else?
They do foldable kayaks.
Foldable kayaks. Oh,
Yeah.
cool. That's a
It's a
great idea.
really crazy, weird products. Yeah. But I mean, when you see them, you're like, oh, actually, the foldable kayak makes a lot more sense to me than
Yeah, yeah, you see a lot of them dry and you have to like load them on top of your car or have a trailer for them.
yeah, apparently these can fit in a small compact vehicle the way they fold up.
All right, what else?
And then I'll here, I feel like I should go to the website just in case I think those are the major ones. The other ones are just, hold on, let me go to the website. Those are the ones that really caught my attention because the price tags are so high and I know people are willing to pay up for that functionality. The other ones just seemed like they were competing with more the crowd, so to speak. Let's see.
Yeah, I mean,
Oh, sorry, stand-up paddle boards. I should know that. Isle sells the stand-up paddle boards. Now, in fairness, stand-up paddle boards, there are quite a few providers there, so someone would have to really dig in and feel like they felt comfortable with Isle stand-up paddle boards versus others. But when I looked, the comparable stoves and the kayaks that fold in half, they're probably really your best bet if those are considerations for what you're trying to do.
okay, understood. Thank you. That's very interesting.
It's interesting. I mean, it's if on a sales basis, given that it's easy to understand how that operating income number comes down, right? Because I mean, when it's a young company, it literally just went public a year and a half ago, then you're really just worried about the profitability and whether or not that management team isn't doing a series of complete dumbness as relates to how they spend in the money they just raised in the public markets. But it looks to me like, given what I'm seeing on gross margins and given the way that they're talking about their operating margins, I'm not worried about the fact that they're going to do anything other than either make the company more profitable or buy another company that will help them with their product line that feeds right into their classic customer, which I think is going to be this. I have a lot more money than normal, but I love the outdoors, so to speak.
Right. Okay, cool. Overall market, you just think stuff is really cheap fundamentally.
A lot of stuff has gotten cheap. Like even I'm not positive about quite a few companies. I can't short them here because the thing is, until you have a real confirmation, like, look, the recession, is it a recession? Is it not a recession? You know, technically there was a definition that now everybody's backing away from, which is 2 down quarters of GDP. You know, in fairness, when I was growing up in school, there wasn't any kind of definition. So, you know, I'm not sure what that was all about. This looks a whole lot more to me like what happened in 1998 through 99. Where you ended the year and landed on about a 2% GDP growth, but you had huge parts of the world in absolute trauma, for lack of a better way to describe it. And then afterwards, there was a lot of QE. Now in 99, there was a lot of QE because people were worried about the millennium effect. I don't know how to think about it going into this next year. And really, we won't know until we start to get into next year. But I will say that a lot of the election overhang that was happening in multiple countries has been alleviated. And most likely, given some of that, you will want to see GDP growth, not GDP austerity for the next 2 years. That being the case, just having a swap from from a period of austerity to quantitative easing should actually, even the companies that I'm not favorable towards, pull them up. So it's a very awkward point in time. And also the valuations are so cheap that it's just dangerous to short right now. I mean, look, I'm not a fan of Amazon, right? But if Jassy actually gets this quarter through such that there's no question that the board's going to be pissed or not pissed, for lack of a better way to say it, Amazon probably does start to kick up. So like if you get Jassy actually coming in better than we would have anticipated because the consumer held in for Q4 on the retail side of the business, and you get the data business doing okay. So two things, it doesn't have to do great, just has to do okay. Then Jassy is going to be just fine. And then if you get any kind of economic pickup, Amazon will spin on a dime. And that's despite the fact I'm not a fan of Amazon. You know what I'm saying? Right this minute. I've been historically a fan of Amazon, just not these last years, so to speak.
Right. Well, they're saying the cloud business is going to slow down.
Yeah, everybody thinks the cloud business is going to slow down, and there's probably some merit to that, especially if we're looking at this last quarter. It's just, what do we think the cloud business will ultimately do in the next year, next 2 years? And are we just getting a massive opportunity? I don't know the answer to that, but I will say that if we enter a period of quantitative easing, we're off into the races. And if we get, so the scenarios are really tough right now. Both directions, strangely enough.
Yeah. Okay.
No, you're biased downwards or you're biased upwards? How are you thinking about it?
Downwards as of yesterday. I mean,
because of the technicals.
All of a sudden, I mean, it just showed some good technical sell levels. So
yeah, I mean, that's the thing that scares me a bit, because we know of more than one blow up coming out of this FTX. Strangely enough, I mean, he even said, and it's in one of the videos, that like, Sequoia funds, BlackRock, a bunch were named as like investors, quote unquote, that own the FTT token or FTX token or FTT token, and were investors in FTX. I'll release that episode, but I think it's episode 4 or 5, where he talks about his investors. And oh my God, it just makes me want to puke out a little bit in my throat every time I listen to him talk about how private equity, if you didn't, like, he's asked a question about risk, and he's like, well, if you're busy worried about downside risk, then you'd never invest any money. Private equity people don't care about downside risk. Yeah, there's a possibility it goes to zero, but really they're thinking about the value that you're bringing as an exchange. I'm like, let me get this straight. You just flat out telling us that these 3 firms don't even bother to actually vet the business model, since the only thing that matters if you're an exchange is whether or not you can actually properly clear trades, which 100% is a risk management function. What the F? I was like, not enjoying. I almost like swallowed my retainer, for lack of a better way to describe it.
Part of his MO for raising money was he invested right back into that company, like Sequoia.
Yeah.
Right. So
yeah, so it looks like a round trip, but it's unclear to me. It's unclear to me that there's some things that are unclear to me about the way he said it. Like, so if he was giving them cash money, then maybe, but if he was giving them like FTT tokens, as he was with some of the other crypto organizations, you know what I mean?
Yeah, that's bad.
Yeah, but if he actually gave him cash money,
surely they wouldn't fall for that.
Yeah, I don't think they would fall for that.
Maybe it was after the fact, though.
Yeah. And I mean, in fairness, I'm not convinced that he was truthful throughout this entire interview. I think he was truthful in the way that you would expect someone internal to a firm that's blown up to be truthful. Do you know what I mean? You're a skitter around things that won't necessarily, so it's like, here's the answer, but I'm going to go this way instead. There was some of that.
Yeah, messed up. Okay. Thank you, May.
All right, take care, guys. Good luck in these markets. It's so bloodbathy these days. Bye.